Are you looking to invest in your first short-term rental but have no idea which market to invest? Today I'm going to give you a roadmap so you can find your own golden spot. So stick around until the end because I'll reveal the tools I use to crunch my number and make my choices. First off, let's get this clear. I'm no financial guru or legal advisor. I'm just sharing my personal experience and what I've learned from my investing in short-term rentals. So don't take this as legal financial advice, just some friendly tips from one investor to another. Now, choosing your market isn't about following the trend or media reports. It is about your goal, the money you got in your pocket, and your appetite for risk. And let's not forget the gut feeling. So let's dive into it now and find the market that's just right for you. First up, know what you're after or what is your goal. Do you want fast cash flow, a mixture of cash flow and potential property appreciation? Although side notes here, nobody can predict the future, so don't count your chickens. Or do you just want a safe place to park your cash even if it means that you're taking a loss to offset your other income? So figuring out your goal will steer you towards the right market for you. Next up, let's talk about your financial game plan. This is not just about the money you got laying around. It is about your total financial picture. Your day job salary, your credit score, and your debt to income ratio will all come into play. The more solid these are, obviously, the more doors open up for you. Let me paint a picture for you. Let's just say you got 100K saved up ready to invest. You got a steady paycheck coming in, a credit score that's looking good, and your debt, they're under control. In this case, you could potentially scoop up a vacation home worth 600K. How so? Well, you might just qualify for a vacation home loan with just 10% down and a pretty favorable interest rate. Let's break down the numbers. You got 25K set aside for furnishing your new pad, another 10K for closing costs, and another 5K for various fees. After all that, you're left with 60K for a down payment. And with a 10% down payment, now you can aim for a home value at 600K. Now let's imagine that you can get a traditional loan. No sweat, there are other ways, like a debt service coverage loan or the DSCR loan. But this type of loan usually requires a bigger down payment, like a 25% or more of the home price. And if you're starting with a saying 100K, right? Now you still want to budget a 25K for furnishing the place, a 10K for closing costs, and let's just say another 5K for just in case and various fee. That adds up to, again, the 40K. Now, here's what gets interesting. Once you've accounted for all the other standard costs, you're left with the same 60K from your original 100K for your down payment. But with a disco loan requiring a 25% down payment, this means you're only able to buy a home up around 240K. It is a different picture from the traditional loan scenario, isn't it? Now, this is why it is so crucial to get real with your financial situation. It helps you see what's actually achievable for you and guide you towards the right market. Now, let's talk about risk. What kind of investor are you? Do you crave that high adrenaline rush that comes with a high risk, high reward kind of scenario? Or are you the type who prefer to cruise along and slow and steady routes? For those of you who are high risk takers, you might want to look into rental arbitrage. This is a strategy where you lease a property from an owner, decked it out with awesome furnishing, and then list it on Airbnb or VRBO. It is like playing a high-stake game. You could start with a 30K investment and end up raking in 40 plus K a year. But remember, it is a gamble. If the owner decides that they want their place back or the city changes its rule, you're stuck with a bunch of furniture, no property, and zero income. And obviously, because you're renting the place, there's no equity, there's no depreciation, and there's no appreciation from the property either. Now, if high risk isn't your thing, there are other options. For instance, you might be eyeing a hot vacation spot. These places can be cash cows with massive earning potential, but the competition is fierce and the economy could be unpredictable. If the tourist industry slows down, your earning might take a hit. And if you're thinking about switching to a traditional long-term rental model, it might be tough finding a tenant willing to pay the price you need in a hot vacation spot. Alternatively, you might want to consider a market that can handle both long and short-term rental. These places might not offer you the sexiest cash-on-cash return straight away, but provide a bit more security. If the short-term rental scene gets a little rocky, you can switch to long-term or even mid-term rental. This flexibility is what led me personally to Jacksonville, Florida. It's not as flashy as some vacation hotspot, but it offers a reliable return and the peace of mind for myself. Lastly, trust your gut. Sure, these calculations are super important. They give you a snapshot of what you can afford and what kind of return you can expect. But there is something else to consider. How are you vibing with your investment? Is this a place you feel connected to? Can you see its potential beyond the numbers? Or if it's a city or a region that just doesn't resonate with you, then no amount of potential ROI is going to change that. Think about it as choosing your own home. You wouldn't pick it just because the price is right, would you? You want to make sure you love the neighborhood and the feel of the place. Now, as you're pondering all the information I have thrown at you so far, I have also got some tools that will help you run these numbers. The first is SDRinsight.com. This site compiles data from all major US cities, providing ROI, valuation, average revenue, and more. If you're unsure of where in the United States to even start, this is a good tool as a starting point for you to narrow it down. Second is Airbnb.co. Once you've got your city, this site gives you a detailed breakdown of the listing in your chosen area. You can sort the listing by type, bedroom counts, and more. Plus, it shows you the annual revenue for each Airbnb/VRBO in the area, linking directly to their property for you to get an inside scoop on your potential competitors. The third tool that I always use will be a short-term rental calculator. This tool lets you input all the costs and potential income to calculate your cash-on-cash return. Before you even think about making an offer, make sure you use this tool to run the numbers. So there you go. I hope this helped you on your journey. Remember, this is based on my own experience, so always do your own research and go with what feels right for you. If you have any question, pop them in the comment. Don't forget to like, follow, and stay tuned for more. Here's to finding your perfect Airbnb market. Cheers.